A recession, a depression, an economic collapse. Call it what you want. On YouTube, there are tons of videos warning about an upcoming financial disaster in the United States. Many of these videos are just clickbait to get views. But underneath the surface, beyond the flashy thumbnails, there's a simple truth. As we head into 2024, we still don't fully grasp the implications and possibilities. What happens this year could either lead us to the greatest comeback in history or mark the beginning of a downturn as bad as our worst economic nightmares. Since 2009, this country hasn't experienced any prolonged economic hardships. In fact, there hasn't been a time since the 2008 crash when someone wouldn't have made money investing in the S&P 500 and waiting just 3 years. It's unprecedented. Every instance of pain since that major downturn has witnessed a relatively swift recovery. I mention this because the American perspective has shifted. The concept of a crash or economic pain has faded away. The memories of 2008 and the excruciating market turmoil have been lost, but the story doesn't end there. Due to this imbalance, there's a prevailing belief among the public that this is what economic pain looks like. And indeed, for many of us, these times were challenging. There was a moment when things seemed to unravel, jobs were being lost. Yet, much like all the other instances post-2008, we swiftly recovered. Even in the most recent 2-year dip where the S&P dropped by over 25%, we have gradually witnessed all losses in the S&P 500 erased in a rally that began as far back as October of 2022. But this video isn't focused on the most recent statistics. Instead, it aims to highlight that recessions and depressions are more frequent than recent history suggests. With substantial leverage in the system, many fail to grasp the potential dangers of a future supercrash, one that could rival the severity of the Great Depression. Now, this is where the video takes a turn because most people are unaware of just how horrific the Great Depression was, an actual event that completely altered the course of this country and, in my opinion, could very well happen again. To help you understand, I won't be the one doing the talking. Back in 2020, during a period of serious concern, Warren Buffett dedicated a significant portion of his annual Berkshire conference to discussing recessions and depressions, specifically drawing parallels with the events of 1929. While that might seem like a distant era, the whole ordeal is more relatable than you might think. What he shares is rather alarming when you get into it, and it all begins with this. Take a listen.
The 1929 crash, which led to the Great Depression. And here, the Dow Jones average, which we'll use through this, at that time, that's the one everybody paid attention to. Actually, the second most important average at that time, if you look at the papers, was the New York Times average, which has disappeared. And of course, the Standard & Poor's has probably regarded as a superior yardstick, but the Dow Jones is a perfectly adequate yardstick. And on September 3rd, 1929, the Dow Jones average closed at 381.17, and people were very happy, and buying stocks on margin had worked wonderfully. And the Roaring '20s had a good feeling to it with the auto coming of age and the day of air travel coming along and all kinds of new appliances and the telephone getting wider use, believe it or not. It hadn't really caught on that much prior thereto, but the movies were coming on. It was a happy place. And then, of course, if we'll move to the next slide, we'll look at what happened in the couple of months after September 3rd, and the Dow Jones average almost got cut in half. And that was pretty impressive until we had this recent situation where in a shorter period of time, we lost about a third. But the crash.
To understand the future, you have to understand the past, and to understand the Great Depression, you really need to understand its genesis. You see, if we dig a little bit further, we find that the Great Depression started on October 24th, 1929, on a day known as Black Thursday. On this day, the market dropped by 11% and started a downward spiral that would completely reshape the country. Just a few days later would come Black Tuesday, which is arguably the most famous day in New York Stock Exchange history. That morning, stocks fell 12%, and suddenly overnight, the roaring 20s, a period of unbelievable happiness and positivity, came to a sudden end. By November of that year, the Dow Jones had plummeted by an astonishing 48% from its most recent peak. While this was already considered an unbelievable development, what transpired next was something that most people would have deemed impossible. In the midst of the turmoil, Warren Buffett was born the following summer in 1930. At that point, one might have expected the world and the United States to be in complete disarray. However, the reality was far from that perception. In the spring and summer of that year, a remarkable shift had occurred. The US public began harboring positive thoughts about the economic future, and for good reason. But this shocking turn is yet another lesson of the volatile nature of markets. Take a moment to listen to Warren Buffett as he explains this unexpected turn of events that would go on to change history forever.
I was born about 9 months later, but at that time, I was actually born on August 30th, but the stock market was closed that day, and so I'm using the previous day's figures. But it wasn't, I didn't notice at the time that the market was closed, but the stock market had actually recovered over 20% during that 9.5-month period or thereabouts. People did not think in the fall of 1930, they did not think they were in a Great Depression. They thought it was a recession, very much like had occurred at least a dozen times, although not always when stock markets were important. But we'd had many recessions in the United States over the time, and this did not look like it was something dramatically out of the ordinary. And for a while, actually for about 10 days after my birth, that view held on, and the stock market actually managed to go up all of 1 or 2% there in those 10 days.
In the midst of these historical occurrences, there was a prevailing sense of optimism, a belief that the United States was on the brink of an incredible comeback. Little did people know they were already in the clutches of the Great Depression. Around September 10th, 1930, the Dow Jones showed a reading of 245, making a remarkable recovery of more than 25% since the initial panic drop. Now, you might be wondering why these specific dates matter and why we're delving into this piece of history. The significance lies in what unfolded after this apparent rebound. It sets the stage for the challenging period that followed, shaping the destiny of the country for decades to come. When we talk about economic crashes or recessions, nothing quite compares to the profound impact that swept across the United States in the 1930s. This moment, captured in the Dow Jones numbers, serves as a reminder of what could come to us in the next big crash. You see, following that date, September 1930, the Dow Jones average would fall all the way down to 41.22. That was the low point. On July 8, 1932, from a stock market perspective, the Great Depression bottomed out. People who had invested at the top over here had lost 90% of their money. This meant that psychologically speaking, the market had completely lost faith in stocks as a serious financial instrument. However, this moment was only the beginning of the crises. Instead of a swift market jump, the Dow Jones Industrial wouldn't recover back to its 1929 peak price until November 23, 1954. That is 25 years.
But that's the last day. Well, from that point, if you'll turn to the next slide, the stock market went from a level of 240 to 41, which was a noticeable decline because if somebody had given me $1,000 on the day I was born and I'd bought stocks with it and bought the Dow average, my $1,000 would have become $170 in less than 2 years. And that is something that none of us ever experienced. That we may have had it with one stock occasionally, but in terms of having a broad range of America marked down 83% in 2 years, and marked down 89% of the peak. It was in September 3rd, 1929. Was extraordinary. And in that intervening period, less than 1 year after I was born, just slightly less than 1 year, my dad went to the bank where he worked and had his account. And of course, the bank had a sign on it closed. And so he had no job. And he had 2 kids at that point. And his father had a grocery store, but Charlie and I both worked for my grandfather. Charlie worked there in 1940. I worked there in 1941, so we didn't know each other. But my grandfather said to my father that, don't worry about your groceries, Howard. He says, I'll just let your bill run. That was my grandfather. Not exactly. He cared about his family, but he wasn't going to go crazy.
During any crises in finance, you will hear a lot of people say be greedy when things are bad, and for the most part, this is great advice. But when you put that into the timeline of the Great Depression, you start to see that even the strongest of hands would have trouble believing in the market. 25 years is the better part of most people's careers. Imagine your whole adult life spent working in an environment where America didn't really advance economically. Of course, that's a broad statement, but from the perspective of the market, it really didn't move much. You have to remember that during the height of the Depression years, 25% of the American workforce was unemployed. And for the rest of those that were lucky enough to keep their jobs, they had their wages slashed by 42%. Farm prices fell so drastically that many farmers lost their homes and land. Many went hungry. Faced with disaster, families split up or migrated from their homes in search of work. Hoovervilles, shantytowns constructed of packing crates, abandoned cars, and other cast-off scraps sprung up across the nation. Gangs of youth whose families could no longer support them rode the rails in boxcars, hoping to find jobs. Industry was badly shaken by the Depression. Factories closed, mills and mines were abandoned, fortunes were lost. Business and labor alike were both in serious trouble. The Great Depression was a remarkable event unlike anything before or since. The mere mention of those words used to evoke memories etched with scars of generations past. Interestingly, it's only been quite recently that we've started to somewhat forget the intricate details of this historic episode. The profound impact of the Great Depression lingered for so long that its echoes were ingrained in the collective memory, but as time passes, the details have gradually faded, and now everyone looks at the economy as this impenetrable fortress. Our standard for bad times has been completely altered by the mostly good years we've had since. The potential for danger is always there, and with the S&P now at record prices, it's easy to see why some people truly believe that we are headed down a path where there will be a second Great Depression, one that will change the generation of the future. But I don't want to end this video on a bad note. Instead, let's go to Warren for one last piece of advice. His whole history lesson regarding the 30s wasn't meant to be a scare tactic. Instead, it had a final message that was quite unique if you listen to the whole slideshow. I'll let him explain it right here.
So, if you think about the fact that we're enduring a few months, and we'll endure many more months, but and we don't know how it comes out. And people in the 30s didn't know how it was going to come out, but they endured, persevered, prospered, and the American miracle continued. But it's interesting in that I actually don't have a slide for the next one, because last night I was thinking, after all the slides had been prepared, I was actually thinking about this a little bit, and I remembered that at the start of 1954, the stock market the Dow was only at about 280. And I remember 1954 because it was the best year I ever had in the stock market. And the Dow went from essentially 280 or thereabouts at the start of the year to a little over 400 at the end of the year. And when it went to 400, as soon as when it crossed 381, that famous figure from And this will be hard for some of you to believe, but everybody wondered, is this 1929 all over again? And that seems a little far-fetched because it was a different country in 1954. But that was the common question, and it actually achieved, it achieved such a level of worry about whether we were about to jump off another cliff just because the 381 of 1929 had been exceeded, that they held Senator Fulbright, Bill Fulbright of Arkansas, who became very famous later in terms of the Foreign Relations Committee, but he headed the Senate Banking Committee. And he called a special, for a special investigation, and he called it the, what do you call it, the stock market study. But it really, if you read through it, he really was questioning whether we had built another house of cards again. And on his committee, when he testified with the Dow at 404, he had one line in there right toward the start in his written testimony, and he said, the stock market is high, looks high, it is high, but it's not as high as it looks. But he said it is high. And since that time, if we'll turn to the next slide, of course, we felt the American tailwind at full force, and the Dow, well, let's see, when the Dow went down Friday, but when we made the slide, it was about 24,000. So you're looking at a market today that has produced $100 for every dollar. All you did was had to believe in America and just buy a cross-section of America. You didn't have to read the Wall Street Journal. You didn't have to look up the price of your stock. You didn't have to pay a lot of money in fees to anybody. You just had to believe that the American miracle was intact. But you'd had this testing period between 1929 and really, certainly 1954 is indicated by what happened when it got back up to 380. You had this testing period, and people really, they'd lost faith to some degree. They just didn't see the potential of what America could do. And we found that nothing can stop America when you get right down to it. And it's been true all along. It may have been interrupted with the scariest of scenarios when you had a war with one group of states fighting another group of states. And it may have been tested again in the Great Depression, and it may be tested now to some degree. But in the end, the answer is never bet against America. And that, in my view, is as true today as it was in 1789.
Looking at the whole conference, one thing that stands out is how the main message is that the United States always finds a way. Over the last 6 generations, this country has faced some pretty challenging events. We had the Civil War, 2 world wars, 2 pandemics, a long Cold War, terrorism, and assassinations. Despite all of that, things always got better with time healing the wounds. Let's take a look at a specific day, July 8th, 1932, when the stock market took a nosedive by 90%. Imagine you were a 25-year-old who had invested $1,000 in the Dow Jones on that day. Fast forward to when you're 67 and retiring. That $1,000 turns into $97,000 with reinvested dividends. Adjusted for inflation, that's $604,000. It's a pretty solid example of how even after a major setback, the US has this knack for bouncing back and getting stronger over time. On top of that, there's always going to be this ongoing skepticism about the market, especially when it surpasses previous highs. Today, the Dow Jones Industrial Average is at 38,000, nearly 100 times higher than when those Congress people were worried that we had gone too far. If you tell someone today that 70 years from now the Dow Jones will be at 380,000, you would think that such a high achievement would be impossible, especially if that prediction came after a period of difficulty. Ultimately, human beings can never imagine how civilization will advance and just how much economic development can happen in a country that is an anomaly in world history. Nobody knows where the Dow Jones will end up, but one thing is certain. No matter how high your expectations are, we can go further than that. And on the opposite end, just as we can go up, we can go down. In the Depression, it was a 90% haircut, which in today's world would take the Dow Jones back to 1995 levels. Everything and anything is possible in the world of finance, but no matter what happens, you really shouldn't bet against America. Thank you guys for watching. As always, please make sure you hit that like and subscribe button if you enjoyed it, and let me know what you think about Warren Buffett's comments regarding the Great Depression and our future here in the United States.